Hello, this is Matt Prosseda, Managing Director at the Kafafian Group. This video is the third in a series of banking shorts that TKG is sending out as we collectively deal with the fallout from COVID-19. I hope you find the information helpful as you and the others in your bank work to meet the needs of your customers and your communities. I spent a good part of the last week talking with lenders and credit folks throughout the Mid-Atlantic region, trying to understand how they're dealing with the unprecedented wave of deferral requests. Consumer, residential real estate, small business, and commercial real estate loans are all impacted. Here are 3 things that banks should do now to handle the wave of payment deferral requests you're undoubtedly fielding. First, develop accelerated methods to approve and document deferral requests. Give your managers and loan officers clear instructions on eligibility requirements for interest deferrals and for principal and interest deferrals. Generally, they should have the ability to make most decisions while they're on their first call with their borrowers, and the ability to put the plan into motion quickly. Most banks have created boilerplate documents for residential mortgage and consumer loans. The documentation steps should be quick and easy. Most banks are offering both principal deferrals and principal and interest deferrals, and 90 days seems to be the norm for most of these deferrals. Small business, commercial real estate loans may require more analysis of a borrower's repayment plan, but processing the transaction as quickly as possible should be your goal. Second, be sure your CFO understands how the loan accounting system handles both interest and full payment deferrals. Take a team approach to the process involving both loan operations and the accounting department. Contact the core service provider for specific information on how the system handles deferrals. For principal deferrals, will the maturity date be extended, or will the deferred principal become a balloon payment? For full payment deferrals, will deferred interest be added to the principal balance, or will it be payable at the end of the contract? Be sure to fully test the process so that all parties understand the impact of changes to the core system. Loan operators, the accounting department, and the lenders, particularly so that communication to borrowers is accurate and timely. And develop a simple process for loan operations staff to make changes to the system. A 1-page list of steps for processors to use would be most helpful. And third, use NAICS codes to identify pools of loans which will be immediately impacted, so that you can be proactive in understanding who will need payment relief the most. The hospitality industry, of course, hotels and restaurants, retail and shopping centers, and all industries deemed to be non-life-sustaining, such as building trade contractors and home builders, many types of manufacturing, and law offices are just some examples of those that will be impacted. Provide support from the credit department or loan review in identifying those borrowers, and be proactive in reaching out to them. Every bank's response to this wave of payment deferrals will be different. These recommendations will help your employees deal quickly and efficiently with borrowers' requests, and give them the reassurance that your bank is supporting them through this very difficult period. Your relationship will be stronger, and your bank will be helping to cushion the impact that COVID-19 has on the local and the national economy. We at TKG remain committed to our mission, helping banks perform better. I hope this information is helpful to you and your bank, and I hope your employees and your families remain safe and healthy. Thank you.